I'm investing £50 a day into the S&P 500 for the next 100 days. And in this video, I'm going to talk to you about which ETF I'm picking to invest into, which platform I'm choosing, and talk to you about why I'm doing this. Let's get into the video. So first of all, I'm going to show you what I actually did today. I set up a pie on Trading 212. I then chose the ETF that I'm going to invest in, which I'm choosing the Invesco S&P 500 Accumulative ETF, which is SPXP. I put that ETF into a pie, which is 100% of the pie. There's nothing else in the pie. And the reason I'm doing that is it's better to track. There's better things you can do to track it. You can auto invest into this pie. And also later down the line, if I'm unhappy with it, I can actually add more things into the pie, different ETFs, different S&P 500 ETFs, and be more flexible in that sense. I'm also choosing not to auto invest into this pie because, well, I've done a bit of research and I watched a Dr. Joubert video, and he said that if you do auto invest, it takes Saturday and Sunday as investing days, and then on the Monday when the stock market opens, it actually puts in 3 times or 3 days worth of the investment. So I'm not doing that. I'm going to manually invest myself. So I'm going to do £50 per day manually. And then here I've just named the pie the S&P 500 everyday pie, which it might sound like I'm copying someone, but I did actually have this idea quite a while ago. I just never really had the funds to do it. And then here you can see I've created the pie and I'm just putting in £50. I actually was sat here for quite a few minutes deciding whether I wanted to do £100 per day or £50 per day. My initial idea was £100 per day, but I sort of realized that my cash flow would be affected a little bit. I'm going to talk to you in a little bit after this clip why I'm investing this amount of money every single day and where this money is coming from, because I only usually invest £1,000 every single month, and I'm going to talk to you about that after. So I decide here to put £50 per day. So I invested £50, and then you can see here that I've actually invested that money. I set a goal of 5k, which is 100 days, right? You can see that it's already dropped 1 penny, and there's me just looking at the performance of the ETF. So why am I actually doing this? Well, first of all, I set myself a goal of maxing out my stocks and shares ISA this year. So currently I'm investing £1,000 per month, which doesn't add up to £20,000, adds up to £12,000. And also prior to October, I was only investing around £600 per month. So I'm a bit far off. And when I did the math, I'll be around about £7,500 off. So my original idea was to do £100 per day for the next 75 days to get to that £7,500. But there's not 75 days that the stock market is open between now, which currently is 13th of January, and the 6th of April or the 5th of April, which will be the day that my ISA resets. So I made the decision to extend it a little bit to 100 days. And to be fair, I might extend it for the full year, which seems reasonable if I do a full year of investing £50 per day, which I think it should be open around 250 days in a year. Then that gives me around about £10,000 invested into the S&P 500 for one single year. And another reason, I did watch Dr. Joubert's video on investing £10 per day, and now he started another series where he's investing, I think it said £100 per day for the next 30 days. And my idea came from sort of the £10 per day video, and also in conjunction with the ISA allowance that I needed to fill in. I actually came up with this idea, and I did film an original video like a week or so ago, maybe 2 weeks ago, and I got rid of it because it didn't turn out as what I wanted it to be, because I just explained what I was doing, not actually done the investing itself, which is what I just showed you right now. And then Dr. Joubert put his video out, and I was like, damn, okay, well, that's kind of annoying. Someone's already done the idea. I mean, people have probably been doing this investing every single day thing for a long time. But yes, I've decided to do, if I did £100 per day, that would pretty much, if I didn't add any more to my savings, that would probably delete all of my savings all in one go. So if I do £50 a day, it should give me enough time to bolster my savings whilst also dumping the money into the stock market. But yes, sorry, I went on a bit of a tangent, but the reason is I feel like, the stock market could be at a high, could be at its peak, And it'd be interesting to see how actually investing every single day could affect your dollar cost averaging, as opposed to just investing that £7,500 or £5,000 or whatever it is in the stock market all at once. I'm going to do it every single day and see how that turns out. This might be a stupid idea because the stock market might tank in the next 3 months and I've invested all that money, and then I effectively lose all of that money and the ability to dump that money in when the stock market goes down. But who knows? The stock market could also go up dramatically and I've missed out on the gains by not putting that money in straight away. So this is the middle point a little bit, by hedging against a dip and hedging against a spike by putting money in gradually over time. And this is what I've been doing for the past 3 years, except on a monthly scale where I'm putting in money every single month. But now I'm going to be putting a lot of money in, a lot more money in every single month by putting it in every single day. And I think it'll be very interesting to see how the gains or the percentages change throughout the month and throughout the next 100 days, or potentially throughout the next year. I would like to do it for the next year. It just depends on how my cash flow works out and how my investing mind changes over this next year. And now for the reasons why I'm choosing SPXP, or the Invesco S&P 500 Accumulative ETF. So either I've just released a video talking about the S&P 500, or a video is due to be released talking about the S&P 500, where I go through the most popular or the most traded ETFs for the S&P 500 on Trading 212, and I talk about 5 different factors why each of these different ETFs is picked and what differentiates them from each other. So if you want to find out more about specifically why I chose this ETF or why I could have chosen a different ETF, go watch that video. But one of the main reasons is the expense ratio, and the expense ratio for the Invesco ETFs, or the Invesco S&P 500 ETFs, are the fact that their expense ratio is lower than Vanguard and iShares. I could have easily have chosen an iShares or Vanguard one, but it's just personal choice. I think when it comes to investing in ETFs, especially when they're very similar, like the S&P 500 ETFs, it comes down to whether you believe that the Invesco ETF or the Invesco Investment Trust is going to liquidate all their assets, which I've seen comments like that before, or whether you think that Vanguard is still the best to go to because they have the most assets on hand. Again, it's personal preference. You make a choice based on risk profiling, or you make a choice based on whether you like the color blue or the color red. That was stupid. There are plenty of other reasons why you could choose this ETF or choose a different ETF. Genuinely, if you want to find out more about how to choose an S&P 500 ETF, go watch that video. Hopefully it's out by now. Whether I put this video out first or not, I'm not entirely sure. But this ETF is the one that I chose. I also have a holding in G500, which is the hedged version of the Invesco S&P 500 ETF, which has slightly different performance, which is hedged for the pound or hedged for currency. And in terms of why I'm actually choosing the S&P 500 to invest in right now, I do already have a holding in an all-world ETF. I do already have a holding in an S&P 500 ETF, and I have holdings in US companies and UK companies. I'm trying to move away from UK companies, from dividend-paying companies in the UK, because of the slow growth and the poor returns over the last few years, and probably for the next 10 years or so, 5 to 10 years at least, I would imagine, poor returns. And also, I do have large holdings in US companies, but they're high risk. I have tech companies, I have Visa, I have Realty Income, which is a real estate company. But I need to have a bit more diversification, and also I'm missing out on some gains. Like I keep seeing in a lot of the comments in my recent videos, why don't I have an S&P 500 ETF in my portfolio? And I do. It's just not really widely spoken about, and I haven't had it for that long. I probably should have had it for the last 2 years, but I tried to give investing in individual stocks a go. I tried to give the UK a go, and both of those haven't really performed that well for me. Yeah, I got pretty lucky with investing in Microsoft and Google and Amazon, but I haven't put enough money in it to make a difference. So to be able to put a lot of money in and to hit my goal of having a portfolio which is like 25%, 50%, or 75% ETFs, I need to put more money into ETFs. And realistically, the S&P 500 is probably the best performing, one of the best performing ETFs, and also safest ETFs over the last however many years. So it's probably a good bet for me right now. Although I cannot guarantee that past performance will guarantee future results. There are other things coming to this channel. I am investing more in ETFs. I'm going to be talking about more different types of ETFs. I have a video coming out, or it's already just been released, about the S&P 500 and the S&P 500 ETFs that you can pick on Trading 212. I will also be doing a video coming up talking about all world ETFs and what the differences are between all of those, because I think there's quite a few differences and where you can actually choose between these different ETFs. I also have a video coming up talking about the QQQ or the NASDAQ, all the different types of ETFs that you can get on for tech companies, for the NASDAQ and all that sort of stuff, because I'm going to be making an investment in some of those types of ETFs. Look out for more videos from me. And if you haven't already, check out some of these videos. This one right here, or this one right here. I've heard this one's good. And to be fair, this one you could probably check out as well. That was a silly joke because I made them all. Anyway, thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, please leave me a comment below and I will give you a reply. Thank you.